Buying insurance can feel super complicated, right? But what if I told you there's a really simple yet powerful way to protect your family's financial future? Well, that's what we're going to break down today. Term insurance.
This is the big one, isn't it? It's the question that probably keeps a lot of us up at night. How do we make sure that the people we love are taken care of no matter what happens? But the good news? The answer is probably a lot more straightforward than you think.
And that solution, that simple, powerful tool, is term insurance. Just think of it like this. It's pure life insurance. No confusing investment stuff bolted on. It has one job, and believe me, it does that job incredibly well. So let's get into it.
Okay, so at its heart, term insurance is all about pure, simple financial protection. And because you're not paying for any of those investment extras, you can get a huge amount of coverage for a surprisingly low price. Its only job is to be that financial safety net for your family if, you're not around anymore.
And this table, wow, this really shows you the difference, doesn't it? See, with term insurance, pretty much every single rupee you pay goes directly into buying protection. But with those other combined plans like endowments or ULIPs, your money gets split. Some goes to insurance, some goes to investment. And that usually means you end up paying a lot more for way less coverage.
Okay, so you're sold on the idea, but choosing a plan? That can feel like, where do I even start? But it really doesn't have to be that complicated. We can actually boil it all down to a simple framework built around just a few key numbers. Let's walk through it.
All right, first up, and this is probably the single most important number you need to look at, the Claims Settlement Ratio, or CSR. I like to think of it as the insurance company's report card. A CSR that's over 95%, that's a great sign. It means the company is super reliable and pays out on the vast, vast majority of its claims. This is your number one clue to how trustworthy they are.
Okay, next up, how much coverage do you actually need? It's so easy to get this wrong and be underinsured. So here's a really solid rule of thumb for you. Aim for coverage that's at least 10 to 15 times your annual income. So let's say you earn 10 lakhs a year. You should be looking for a cover of at least 1 crore. That's what's going to ensure your family can handle everything from day-to-day bills to their big future goals.
So once you've got those two big numbers sorted, the CSR and your coverage amount, there are a few other details you'll want to look at to really tailor the plan to your life. Things like, how long does the policy actually last? Should it cover you till you're 60, 65? Can you add any extra protection? We call them riders for things like a critical illness. And, how easy is it to actually get help from them when you need it most? And of course, the big one, does the premium fit your budget without you having to skimp on coverage? Getting this balance right is absolutely key.
Okay, so now that we have this framework, let's take a look at how it applies to some of the top insurance companies in India. You'll see that each one has its own unique strength, whether that's rock-solid trust, slick digital convenience, or just pure top-tier performance.
First up, of course, is LIC of India. For so many of us, this name is basically shorthand for trust. It's government-backed, it's the country's oldest insurer, it's really the go-to choice for anyone who puts a premium on that long-standing reputation and prefers having that physical, in-person support.
Then, on the complete other end of the spectrum, you've got a company like HDFC Life. They are a real leader in the digital space. So, if you're someone who's super comfortable managing your finances online and you just want a smooth, tech-first experience right from the get-go, HDFC Life is definitely a top contender. And then there's this. If your decision really boils down to that one critical number we talked about, that claims settlement ratio, then you absolutely have to look at Max Life Insurance. Year after year, they consistently have one of the highest CSRs in the entire industry. So their track record on reliability, it's incredibly strong.
Okay, choosing the right plan is a massive step forward. But, and this is a big but, it's just as important to avoid some really common mistakes that could end up undermining all your hard work. Let's call this section Protecting Your Protection, because that's exactly what it's about.
So here they are, the 4 big pitfalls you've got to watch out for. Number 1, don't just pick the cheapest plan. Low coverage is a huge risk. Number 2, be totally 100% honest about your health. Hiding something now could lead to a claim getting rejected later, and that's the last thing you want. 3, you've got to read the fine print, especially the part about what's not covered. And finally, number 4, always make sure your nominee details are up to date. Seriously, getting these things right is just as important as picking the right plan in the first place.
Phew, we've covered a lot of ground, haven't we? So, let's bring it all home. Let's put everything together
into one simple action plan you can use to go out there and make a really confident decision.
All right, here it is, your next steps. First, buy as early as you possibly can. Your age is the single biggest factor that determines your premium, so the younger you are, the cheaper it is. Second, do that quick calculation, 10 to 15 times your annual income. That's your coverage target. Third, make a short list of companies that have a CSR above 95%. Then from that list, go online and compare quotes from at least 3 to 5 of them to find the best rate. And finally, and this might be the most important step of all, please tell your nominee, your family, about the policy. After all, it's for them.
So there you have it. You now have the complete framework to cut through all the noise and make a really